Apple stock is having a fantastic 2023. It is currently trading at $158.85 a share, which means it is up around 27%. What we're going to be doing today is looking at the stock and then looking at my stock valuation spreadsheet. This is an automated spreadsheet that will bring in the latest company financials, and we will use these in our different models to give the intrinsic value of Apple to see if it's a buy or a sell. We'll be looking at the discounted free cash flow model, the Ben Graham formula, and the comparable companies model, and see if Apple is a buy or a sell. So as I said, yes, Apple is having a fantastic 2023, but if we look at the stock over the last year, it's been on a bit of a roller coaster. Highs of around about 180, lows of about 124. And if we go over the last 5 years, the stock, which was at a $57 a share at the bottom of the pandemic. Since then, it has rallied almost 117%, and this is with a little bit of a dip from its all-time highs. So let's get into my stock summary spreadsheet. This is an automated spreadsheet, as I said. So what we'll do is we'll type in the ticker of Apple, and it will load all the latest company financials and information about the stock. Price $158, $2.5 trillion stock, one of the largest stocks. I believe it is the biggest, either this or Microsoft. I think it is Apple now. But if we look at some of the numbers here, P 26.99, higher than the market average. We would like to say it a little bit lower, but within still sort of the normal boundaries. Earnings per share, $5.89 a share. Beta of 1.3, so this means the stock is more volatile than the market. As the market moves up, Apple will move higher, and as the market moves down, Apple could potentially move lower. But as we've seen, if we do compare Apple to the S&P 500 in that similar time, I think you will not be surprised if we see that Apple has crushed the market in the last 5 years, 285% compared to 51. Now, if we do look at the last year, a down year for Apple relatively, but it's still doing better than the broader market, only down 4% compared to the 10.6 of the S&P 500. Dividends. Apple is not necessarily a dividend stock, but a good stock that people care about, and they do pay a dividend, 0.58. That is a dividend per share of 92 cents. The total dividend they pay is $14.6 billion. And if we have a look at the payout ratios, a very safe dividend. For net income payout ratio of 15.3 and a free cash flow of 14.95. Now, if you want to get the shares, buy before the 10th of May and you will be paid that dividend. Can you please give a like on the video? It really helps me out. If we could get this to 15 likes, I think that would be really cool. Thank you guys for supporting the channel. It means a lot to me. Now we'll have a look at the revenue. Is revenue increasing? Yes. Well, from 2018 to the trailing 12 months, you can see it's gone from 265 billion, an all-time high revenue in 2020, just shy of 400 billion, but back down a little bit to 384 billion. So it has increased massively, but a little drop off in the trailing 12 months. This could be just because of when this is, because we are in the first quarter of the year, and potentially this could be a lesser year. So we'll have a look at these and take this into account. But you can see for 2022, it was still a very strong year. Next, we want to look at net income. Is it increasing? Yes, 60 billion to just shy of 100 billion in 2022, and a little drop off once again. Net income has dropped off slightly more than the profit, so the net income margins will be slightly less, but overall better than it was in 21, and definitely better than it was in the prior years. Now we look at the shares outstanding. You can see here it's gone from 4.4 billion to 17 billion. That is not entirely correct. This is because of the stock split that happened back between 2020 and 2019. But we can see here they have been buying back their shares, 17 billion all the way down to 15.8. That is a very aggressive buyback. Why does that help? Well, if there's 10 shares of a company, you own one, you own 10% of the company, you have 10% of the profits. But if they buy back 5 shares, there's only 5 shares, that would increase your relative stake to 20%. It rewards shareholders. It's a different way, but still rewards shareholders. Finally, we're looking at the free cash flow. What is this? Well, it's cash from operating activities minus capital expenditures, and also used to pay the dividends, as you can see here. And it is increasing massively. They had 111 billion in 2022, up from 64 in 2018. But once again, the trailing 12 months is down to 97.5 billion. So we do have 2 ways of looking here. We can look at the 2020 numbers, but we do have the trailing 12 months. So we're going to have a more up-to-date valuation here, and this is discounted free cash flow model, calculates the future free cash flows, discounts them to today's value, and you can see it actually values the stock at around about 111 based on the averages. So what we'll do is we will have a look at the growth, and as we've seen, the revenue growth rate is dropped down a bit. But this is about 7%. I think that is a fair estimate, really. If we look at what the analysts are saying in terms of Apple's growth rate over the next few years, they'll probably have it around about anywhere from 5 to 10%, and they have it about 8.13. So I don't think these numbers are completely out of the realms of possibility. So we'll leave that number there. Next, we look at the net income margins. Once again, about 24%. I think that's fine as well. And then finally, the net income to free cash flow. All these numbers look fine to me, so I think this is a fair estimate for discounted free cash flow model, which is about $111 a share. Surprise doesn't like it a little bit more. If we ignore the trailing 12 months and have a look at this, you can see it actually likes it a lot less, interestingly enough. But we're looking at the trailing 12 months because this is the data we have. Now we want to look at the Ben Graham's model. This is looking at the earnings per share, the expected growth rate of a non-growth company, Apple's growth, times the average corporate bond yield over the current corporate bond yield. And as we said before, Apple's growth is about 8.13%. Doesn't like the stock either. $85 a share, $64 a share. So our first two models really don't like Apple. Think it is overvalued at the minute. If we look at the discounted free cash flow, it wasn't a $110 stock since what, 2021? Is we have to go back to there. To a $60 stock, we have to go back to the bottom of the pandemic. Ben Graham would have definitely bought it then, but it's I think this is because of the lower growth rate. If we just say Apple, if we have a look at the prior years of Apple, the past 5 years, let's see if we have a different number here. That is 22%. So if we have a look at that and change the number to 22%, what would that give us the stock? $164 a share. Now, if Apple can repeat their growth in the prior years, then obviously that would be the case, but the company is one of the largest companies in the world. I don't see that happening really, so that 8% I am fine with. But the Graham's model does not like the stock. Finally, we look at the comparables companies model. This will look at a series of metrics: EV to revenue, EV to EBITDA, and PE ratio. Ideally, the lower of these is better, and we'll plop in a few comparable companies. So I think because it's one of the largest companies, we're going to compare it to the largest as well. We'll do Microsoft, we'll do Google, and we'll also do Amazon as well. So, Amazon actually does not have a PE ratio, so we're going to ignore Amazon for right now. We're going to compare it to, we'll go Dell, a bit more out there, but we'll see what that looks like. So in terms of EV to revenue, compared to Microsoft and all these companies, it is about in the middle. EV to EBITDA, lower than Microsoft, higher than the other two companies, and PE again. So based on these comparable companies, you can see the stock is $123 stock. If we were to just compare it to Microsoft alone, if it had the same valuation model, it would be $168 stock. If we compare to another company such as HPQ, which is HP Inc., you can see that this brings the model once again down to $121 again. And if we include Dell in this as well, instead of Google, because I think that's more of a like-to-like comparison, you can see it's $106 stock. So is Apple overvalued? Well, according to models, yes, it is. If you compare to Microsoft, it's undervalued, but if you compare it to more fair, comparable companies, it does look a little bit overvalued. Right, guys, thanks for watching. Please give a like on the video if you've enjoyed it. Check out my Patreon if you're interested in this spreadsheet, and I'll catch you guys next time.